So it all depends on this man, Mario Draghi, president of the European Central Bank, and various facial gestures here. So a bit of a background. Back in March, the ECB removed this clause about using all instruments, okay? They vowed beforehand to use all instruments to battle the danger of deflation, the specter of falling prices, the vicious cycle. And Draghi then clarified that they wanted to remove the sense of urgency, okay? And market side as, okay, we'll have less stimulus. QE is going to end at the end of the year. No more euro printing, a stronger euro, okay? But time has passed since then, and Draghi re-clarified. They only removed the more extreme cases that they're fearing about, not the baseline. The baseline remains the Eurozone economies need more help, need accommodative monetary policy, need more stimulus. Not extreme, but still need support. And we had, since then, various speakers taking different directions. So we had some of the more hawkish members talking about raising interest rates before ending QE, and this helped the euro. We had Draghi and others on the dovish side saying we're moving very, very slowly. So this is what matters now. But let's talk about some details about the actual policy of the ECB. So from April, from this month, the ECB is buying only 60 billion euros worth of bonds. That's below 80 billion that it bought until March, okay? This was planned, this was announced back in December. And this program of buying 60 billion worth of bonds and also corporate bonds will run until the end of the year, until December. The big question is what's next? More QE in 2018, maybe tapering it down very gradually, or maybe ending it abruptly altogether next year. And another question is, will they raise the deposit rate at -40 before ending QE? These are open questions for the ECB. If we look at inflation, it backed down. We had it rising exactly to the ECB's target of 2%. On the headline figure, this includes oil prices, of course. They were the main driver of higher inflation. And core inflation also dropped, very disappointing for the ECB, from 1% to 0.7%. It stood at 0.8, 0.9 for many months, and this setback, this fall back to 0.7 was a disappointment, okay? So Draghi's dovishness was vindicated. We're facing now new figures, new inflation figures, which are expected to be stronger, and GDP growth figures, and the ECB has been patting itself on the back, very pleased that it was responsible for growth, okay? So these figures are, of course, very critical for the next moves.